The market just hit the reset button. And I know what you're thinking. Is this it? Is the dream over? Did I miss my shot? But what if I told you that this isn't the end? It's the exact beginning of something far bigger than you can imagine. Something that could define the next decade of your financial future, specifically for coins like XRP, HBAR, and XLM. Today, we're cutting through the noise, the FUD, the panic. We're going to dissect what just happened in the crypto market, this sudden, brutal market reset, and why it's not just a healthy correction, but a necessary purge setting us up for unprecedented growth. We'll break down Bitcoin's retest, Ethereum's surprising resilience, and then we're diving deep into the movements of XRP, HBAR, SUI, and XLM, revealing why these specific assets are positioned to explode. But before we even touch specific coins, you need to understand the invisible hand pulling the strings. You see the headlines about crypto, but what you're likely missing is the seismic shift happening in the traditional markets, directly orchestrated by Washington. Just yesterday, the Federal Reserve spoke, and what they said or didn't say just injected a massive dose of uncertainty. And then there's the elephant in the room, President Trump's escalating tariff war, which just went into overdrive today, August 1st. What do tariffs on Canadian goods or Swiss watches have to do with your crypto portfolio? You'd be shocked. The truth is, this isn't just a crypto event. This is a global economic chess match, and your investments are pawns in a much larger game. The question is, are you playing to win, or are you about to get checkmated by ignorance? Let's get real. When we say market reset, we're talking about a healthy, albeit painful, shakeout. Think of it like a forest. Sometimes, for new vibrant growth to truly flourish, the old, decaying underbrush needs to be cleared away. That's what's happening right now. For weeks, the crypto fear and greed index was flashing extreme greed. Everyone was high on hopium, betting big, and that's exactly when the smart money gets cautious. This dip, this market reset, pulls us back from the brink of unsustainable exuberance. It flushes out the overleveraged, the weak hands, the emotional traders. It's like hitting the refresh button on a stagnant computer program, clearing the cache, and preparing for optimal performance. But here's where things get more complex, because this isn't just about market psychology. The Federal Reserve, the U.S. central bank, just had its latest FOMC meeting. They held interest rates steady. On the surface, that sounds neutral, right? But Fed Chair Jerome Powell remained remarkably cautious, reiterating a wait-and-see approach. He talked about elevated uncertainty and needing to see more data before any rate cuts. For weeks, markets have been salivating over a September rate cut, seeing it as the ultimate liquidity injection. But the odds for that September cut just dwindled. So if the Fed isn't rushing to pump liquidity into the system, how can crypto possibly soar? And what does this mean for the altcoin season everyone was just talking about? This brings us to the second, often overlooked, macro factor: tariffs. President Trump, as of today, August 1st, has dramatically escalated tariffs on a host of nations, including key trading partners like Canada and Switzerland. This isn't just obscure trade policy, it's a direct tax on imported goods. When tariffs go up, prices for consumers often go up, meaning inflation risks increasing. And if inflation increases, what does that do to the Fed's ability to cut rates? It ties their hands. Think of the global economy as a massive interconnected pipeline. Tariffs are like adding a whole bunch of tiny restrictive valves all along that pipeline. It slows the flow, makes things more expensive, and creates bottlenecks. And guess what? When traditional markets get rocky due to trade wars and inflation fears, crypto, often seen as a risk-on asset, feels the ripple effect. That's why we saw this market reset. It's the market adjusting to these new, tighter economic conditions. Now, let's talk about the king, Bitcoin. It just retested critical support levels after hitting new all-time highs above $122,000 in July. Many are pointing to $117,000 as immediate support, with deeper retests towards $112,000. The question looming over everyone's portfolio is, will $112,000 hold? If it doesn't, could this market reset turn into something far more severe? And how does Bitcoin's dance impact the rest of your altcoin bag? Bitcoin, at around $118,000, has shown remarkable resilience. The dip we've seen is a healthy retest. We're watching $112,000 like a hawk. If Bitcoin can establish a strong floor around that level, it's a massively bullish sign, confirming this market reset as a healthy consolidation. Remember, Bitcoin's path often dictates the overall sentiment. Bitcoin is like the general of the crypto army. When the general makes a strategic retreat, the entire army falls back. But a controlled retreat, like what we're seeing, is a regrouping. It's not a rout. Ethereum, the second in command, has also seen a pullback, now hovering around $3,600 to $3,700 after hitting highs near $3,800. Institutional money is still pouring into Ethereum ETFs, but even ETH needs to digest these gains. We're looking at $3,200 as a crucial support level. If that breaks, we could see $3,000. But while Bitcoin and Ethereum set the stage, the real fireworks might be brewing in the altcoin arena. And one asset, in particular, has everyone on the edge of their seats. I'm talking about XRP. After its incredible surge this past month, pushing past $3, we've seen a recent dip, bringing it back to around $3.05. For years, XRP has been bogged down by legal battles, acting like an anchor on its true potential. But with recent legal clarity and massive institutional interest, the question isn't if XRP will move, but how high. Can XRP truly decouple from Bitcoin's short-term movements, or is it destined to follow the king? And what exactly needs to happen for XRP to finally break free and soar towards multi-dollar highs? XRP has shown incredible strength, even amidst this market reset. It's holding critical support around $2.70, and if we see further downward pressure, $2.50 is the next major buffer. This recent dip is nothing more than profit-taking after a parabolic run. Why is XRP so important? It's designed for global payments, instant settlements, like an express lane on the financial superhighway. Large institutions are eyeing XRP because it solves real-world problems. The legal clouds are clearing, and that's unlocking a floodgate of potential. A sustained break above $3.30 could signal the next leg up, possibly even testing its previous all-time highs. But what if there's another player in the game, a quiet cousin to XRP, that could offer even more explosive upside in the coming months? We need to talk about XLM, Stellar Lumens. Often overshadowed by XRP, XLM is also focused on cross-border payments, but with a slightly different approach, often targeting individuals and smaller transactions. XLM has been holding its ground around 25 to 29 cents during this market reset, but its long-term potential is often underestimated. The real question is, in a world hungry for fast, cheap transactions, could XLM quietly outpace its more famous counterpart, and what are the signals that will tell us when its moment is truly here? XLM is currently pushing against significant resistance around 27 cents. If it breaks this with strong volume, we could see a rapid ascent towards 30 cents and beyond. The technical indicators suggest buyers are reclaiming momentum. While XRP targets megabanks, XLM aims for the everyday user, the remittances, the microtransactions that underpin developing economies. This makes XLM incredibly important for the wider adoption of crypto. Its focus on speed and low fees makes it a dark horse in the race for global financial infrastructure. This market reset might be precisely the moment when fresh capital flows into these foundational Layer 1 solutions. But beyond the payment rails, another new contender is showing signs of extreme volatility, and with it, extreme opportunity. Then there's SUI. This is one of the newer high-performance blockchains that promise to revolutionize everything from gaming to DeFi. And it has seen some serious action, hitting highs around $4 before a recent, significant token unlock event caused a sharp dip down towards $3.50. This kind of volatility scares many, but for those who understand the game, it screams opportunity. SUI just experienced a massive token unlock, millions of tokens hitting the market. For most projects, that's a death knell. So why are some still bullish on SUI, and could this market reset be clearing the way for its true price discovery? The recent SUI token unlock was a significant event, flooding the market with new supply and causing a sharp price drop. For many, this is a red flag. But for others, it's the natural progression of a project, the dam breaking that then allows for stable, organic growth. SUI is now retesting critical support levels around $3.07, and even deeper at $3.15 to $3.20. The underlying technology of SUI is still incredibly powerful, designed for high throughput and low latency. The short-term pain from the unlock often creates fantastic buying opportunities for those with a longer vision. If SUI can hold these support levels, we could see a strong rebound. But what if I told you that the key to understanding this entire market reset, the driving force behind the next wave of institutional adoption, and the ultimate climax of this entire crypto story, lies with a single groundbreaking technology? One that many are still underestimating, and it goes by one name. I'm talking about HBAR, and its native token, HBAR. While the world is obsessing over meme coins and short-term pumps, the quiet giants of global finance and enterprise are building on HBAR. This isn't a blockchain, it's a hash graph, a fundamentally different, faster, and more secure distributed ledger technology. HBAR has been hovering around 18 to 20 cents, seeing its own minor corrections during this market reset. But here's the secret: while you're watching the drama unfold elsewhere, HBAR is quietly becoming the backbone of real-world asset tokenization, central bank digital currencies, and massive enterprise solutions. The question you must ask yourself is, what happens when the world's biggest companies, the ones with trillions of dollars, finally fully activate their projects on HBAR? What does that do to the value of HBAR? And could this be the ultimate payoff for those who truly understand where the future of digital finance is headed? This market reset is setting the stage. While the speculators are flushed out, the real builders are advancing. And no one embodies this more than HBAR and HBAR. We're talking about a network designed from the ground up for enterprise adoption. Companies like Google, IBM, Dell, and Boeing are already members of the HBAR Governing Council. They aren't just playing with crypto, they're integrating it into their core operations. Imagine global supply chains, carbon credit markets, real estate, and even major financial institutions leveraging HBAR to tokenize trillions of dollars in real-world assets. The value of HBAR is directly tied to the usage of the network. Every transaction on HBAR requires HBAR. As these enterprise use cases scale, the demand for HBAR skyrockets. We've seen HBAR hold support around $0.165, and while short-term price action might seem subdued, the long-term fundamentals are screaming. Analysts are projecting HBAR well above its current price, with some forecasting north of $1 by 2026, driven by this explosive enterprise adoption. This isn't just about a pump. It's about a fundamental revaluation as the world wakes up to the power of decentralized public networks. The market reset we experienced is simply clearing the path for this massive, institutional-driven surge. Think of HBAR as the plumbing for the future of finance. It's not flashy, but without it, the whole system collapses. And as more and more buildings, enterprises connect to that plumbing, the value of the infrastructure, HBAR, becomes undeniable. So where does this leave you? The market reset wasn't a crash, it was a necessary recalibration. It was the market clearing the decks, shaking out the weak, and preparing for the true sustained bull run that comes from fundamental adoption and real-world utility. You now understand that the forces at play are far bigger than daily candle closes. You're not just a passive observer, you're an informed investor. This is your opportunity to pivot, to position yourself for the inevitable explosion that comes when institutional capital truly flows into these foundational assets like XRP, HBAR, and XLM. Don't be swayed by fear. Be empowered by knowledge. If you want to stay ahead of these monumental shifts, if you want to understand exactly when these tipping points will occur, then you absolutely need to watch my next video. It dives even deeper into the specific triggers for each of these assets, giving you the exact roadmap to navigate the coming market transformation. Click the video on your screen right now to uncover the next crucial piece of this puzzle. Like this video, subscribe, and hit that notification bell so you don't miss a single crucial update. Your financial future depends on it. Peace.